Petty cash is the amount of cash kept on hand by businesses to pay for minor expenditures. Let's look at Simon's sport business. He is in need of purchasing numerous sport supplies to replenish stocks. As these are deemed relatively cheap, he utilizes a petty cash fund. There are three main steps when making a petty cash fund: establishing the fund, making payments from the fund, and replenishing it. Establishing the fund is achieved by recording a check needed for the amount of the fund so expenses can be paid. In Simon's case, he needs $500 to pay for expenses. Thus, a $500 check is cashed and placed into the fund as seen in the journal entries. Now that Simon has established the fund, he can make payments. The two payments include paying cash directly towards the expenses or payments to employees who seek reimbursement from the fund for payments that they have personally made. In either case, the custodian, which would be the manager for Simon, would keep the receipts because entries are only made when establishing and replenishing the fund. Thus, keeping them is to minimize the error. Once Simon has purchased the supplies, the cash fund decreases and it must be replenished to its original amount. This is done by counting the remaining cash and then cashing in a check that brings the fund back to its original amount. As seen in Simon's case, total receipts add to $400, as cash left is $100, meaning that a check of $400 is needed to bring it back to its original amount. This is further shown in the journal entry, which displays total expenses adding up to $400, and thus a $400 check is needed. However, when replenishing the fund, the custodian may not obtain all receipts or will give incorrect change, thus resulting in a discrepancy between the cash needed for replenishment and amount of receipts. This is called cash over short, which is a temporary account which can either be in a debit balance or a credit balance. A debit balance indicates that there's an increase in expenses, whereas a credit balance indicates that there's been a decrease in expenses. In Simon's case, let us assume the custodian incorrectly counts cash left as $98 instead of $100. Thus, a check of $402 is needed to replenish the fund, despite there only being $400 worth of receipts as seen in the replenishment report. The $2 difference is charged to the cash over short account as a debit balance, and thus there is an increase in expenses. Now, Simon is able to use petty cash funds properly and better monitor his company's cash outflows.